Less than P data end equals 389 data start equals 68 greater than. Today, I want to talk about a major economic decision that's just come out of Ottawa. The Bank of Canada has chosen to hold its key interest rate steady at 2.75% as of June 4, 2025. Now, this may seem like a technical move, but its implications are far-reaching, especially in the current climate of economic instability. Less than P data end equals 959 data start equals 391 greater than. This marks the second consecutive time the central bank has opted not to adjust the rate. The message is clear. Caution is the name of the game. According to Governor Tiff Macklem, the economic outlook is clouded by an unprecedented level of uncertainty, particularly in relation to recent U.S. tariff hikes on Canadian steel and aluminum. These tariffs have doubled to 50%, a dramatic increase that could significantly weigh on Canada's export economy. Considering that Canada is the leading supplier of these materials to the U.S., the potential fallout is serious. Less than CUP data end equals 1319. Data start equals 961 greater than. While the economy hasn't taken a dramatic hit just yet, it's showing mixed signals. On one hand, GDP growth for Q1 clocked in at an annualized 2.2%, which is actually stronger than many anticipated. And, on the other hand, we're seeing early warning signs in the labor market. Unemployment has ticked up to 6.9%, and that's got policymakers watching very closely. Less than P data end equals 1628 data start equals 1321 greater than inflation is also adding complexity to the decision-making process. Though the overall rate remains relatively contained at 1.7%, core inflation, the kind the Bank of Canada focuses on most, is above 3%. That's higher than the upper end of the central bank's target range, making any immediate rate cut risky. Less than P data end equals 1968. Data start equals 1630, greater than. In essence, the Bank of Canada is walking a tightrope. They're choosing to hold their policy ammunition in reserve, rather than use it too soon. There's even a possibility of rate cuts in the near future if inflation calms and economic pressures mount, particularly as the effects of U.S. trade policy ripple through the Canadian economy. Less than P data end equals 2266 data start equals 1970 greater than. Governor Macklem emphasized that the decision was reached with clear consensus among policy members, but there was more divergence when looking ahead. Some voices within the bank are leaning toward a rate reduction if tariffs and global uncertainty start to slow the economy down more noticeably. Less than P data end equals 2641 data start equals 2268 greater than. So what does this mean for Canadians? For now, borrowing costs remain unchanged, which offers some stability for homeowners, businesses, and consumers alike. But the situation remains fluid. The bank is essentially buying time, waiting to see how the trade dispute evolves, how inflation behaves, and whether our economy can continue to hold its ground amid external shocks. Less than P data end equals 2811 data is last node equals data is only node equals data start equals 2643 greater than. In short, it's a moment of strategic patience. The Bank of Canada isn't hitting the panic button just yet, but make no mistake, they're keeping their finger close to it. Stay subscribed for more videos.